Hello, everyone. This is Jack Bosch speaking, and welcome to another episode of the Forever Cash Life Real Estate Podcast. We call it Forever Cash Life because at the end of the day, cash is there to create a better life for you, right? So welcome. We have a couple of guests here today, right? We have Clark and Jace here, and we are super excited for you guys to share with us. You're on a podcast called the Millionaires Unveiled. But actually, before we get started, let me just, we have a little introduction that we're just going to play that we always play. So we'll be right back.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, we're back, and I'm super excited to host this podcast today with our guests, Clark Sheffield and Jace Mattinson. How are you guys doing?
Awesome. Thanks for having us. Happy to be here.
Great. Thank you.
Wonderful. So Clark and Jace are co-hosts of a very interesting podcast that I came across not too long ago, and it's called Millionaires Unveiled, right? Where they interview net worth millionaires about their stories, investment decisions, portfolio allocations, and things like that. They have interviewed over 100 millionaires, and they also interviewed famous guests like Robert Kiyosaki, Chris Hogan, Tom Wheelwright, Clark Jess, and amongst all these great names, I was one of the interviews too. I'm super honored by that. So I'm glad. I wanted have you guys on here because you have a unique kind of view, like insight into how millionaires think, and we want to talk about that a little bit. But first of all, tell us your story. The other part I'm very interested in before I ask the question is that you guys actually use that interview process to learn for yourself and get yourself on the path to being millionaires. And you're one of you guys is already there, and you guys are the other one is working on it. So I'm super excited about that. Let me share. How did you come up with the idea, and give us a little bit of your background? Who wants to go first?
Go ahead, Jace.
So my background, I started after college. I went in Big Four accounting, got my CPA license. Before that, had several jobs, worked a paper route, had a lawn care business in high school like most people. Probably a lot of people don't even know what a paper route is anymore. But I had a paper route for most of middle school and all of high school. And then in college, had various jobs. I worked as a janitor for a little bit. I did some accounting work for a bunch of real estate companies, mainly in the self-storage space, and then also worked at a couple tech companies as well. And then after I did Big Four, got my CPA license, I was a partner at an outsourced accounting firm for a little bit, and then I went in-house with one of my clients. And so now that's kind of what I spend most of my time doing as a CFO for a building materials and hardware company in Texas. We've got all sorts of locations, about 40 locations throughout the state. And, the podcast kind of came about. Clark and I had started discussing investing and investments. And, we had our dad's portfolios more or less because our dads were pretty open with their investment strategies and everything. But Clark and I make a lot of jokes sometimes that our dads are a little bit more risk adverse than maybe we are. And that was all we had. And so we kind of wanted to know, we have all these things, these books, The Millionaire Next Door, The Millionaire Mind, that really got into the theory and kind of put some statistics to millionaires, but we never really had any actual detail of what does somebody do when they become a millionaire. How do they invest? Where do they put their investments? How much are they putting in certain asset classes? And so we really wanted to get a good idea on what millionaires do, how they invest, detailed numbers. Does their investment allocation change based upon where they are in life, based upon income levels? Do they stick with one asset class and always stick with one asset class? And so we basically kind of hatched the idea for the show.
And what's your results? Do they stick with that one asset class usually?
Yes, most don't actually. And
okay.
It's very interesting. Most of the time they diversify a little bit. Now, I wouldn't say that they're spread across tons of asset classes until they get a little bit on the higher echelon of the net worth chain. But somebody who for the most part is going to be worth, let's say, under 5 million, they're going to have a house. A lot of times that house is going to be close to paid off or paid off. But a lot of times these millionaires are also going to be in their 40s, 50s, and 60s, and then they're going to have various amounts in the market or in real estate is kind of what we found. We have a few that invested in small businesses, but a lot of times it's if they're an entrepreneur and they've kind of built a business.
Okay. So is it fair to say that they focused on, it's kind of almost my impression that I see, but you guys have the data now. Is it fair to say that they typically focus on one thing to make the money and then they diversify? Or do they make the money like 8 different things?
No, they make at least the initial capital. They're making it and focus on one thing, whether it's their job or whether it's one business or one avenue, and then diversifying. It's only once they get later in their career, later in life, that they then maybe make it in multiple ways. Okay.
Yeah, and it makes sense because, I mean, from my own experience, like now that we are in that echelon and have been for a while, we're now being presented with all kinds of opportunities, and we sometimes invest a little here, invest a little there, invest a little there. Some doesn't work, some does work, and some blows up, right? And then all of a sudden you make extra money in other areas and you lose some money in others. But we made our money in land flipping. So that's just where we focus on we put the blinders on and went there. So it's good to hear that you see that's kind of the similar pattern for a lot of the millionaires.
Yeah, they're definitely, I wouldn't say what we call shiny object syndrome, where they're dabbling in multiple different ways. Like they're getting really good at one, maybe 2 things, and making a majority of the money initially in those spaces and then diversifying a little bit. And sometimes, like you said, some of those diversification where they might have an opportunity come up in another space, that may turn into another type of business or another type of asset class that performs really well for them. And then they make a whole nother chunk of, what I would call somewhat vertical type income in that way.
That makes sense. Very cool. Great. Clark, so what's your background? Give us a little bit. Also top 4 accounting firms, right?
Yeah, similar to Jace, started at KPMG, big accounting firm, went to BYU undergrad, did accounting. Jace did accounting as well, did my CPA, and then went to Notre Dame, did my master's in accounting. Did a couple of years here in New York City at KPMG, and then went to a multifamily real estate and property management company here where I lead our accounting and finance and investor relations and all that. So big company, about 35 buildings, about 300 million assets under management, and just a big syndication firm. So, I agree with exactly what Jay said about how the podcast got started. I think we started making money, right? We started making more money that we could invest, and we kind of started saying, hey, what do we want to do with it, right? We kind of had a general idea, but that's where the fun started. And we said, hey, well, let's see how other people are doing it, right? Let's see how other people are diversifying. And Jay's kind of touched on it briefly, but he kind of coined the term the 3-legged stool for small business, money in the markets, and then real estate. And so we both kind of said to each other, hey, maybe that's kind of the allocation that we want to take, but let's see how people do it initially and kind of hear some of these stories. And some people are more interested in the stories, and some people are more interested in the allocation of some of these millionaires. So it's been an interesting journey so far.
Wonderful. So I'm interested in a couple of the stories of the millionaires, but then I also want to dive into a little bit more of your guys' story and what you have guys taken from. But let's start with the story. Give me like the 1 or 2 most crazy stories that you've heard of how, or not the crazy ones, but the ones, like, here's the thing. A lot of our listeners are people who want to create a life of abundance. You want to be the hero for somebody in their family, hero for their parents, hero for their kids, and they want to be doing something that is actually doable, that is actually not rocket science to create. Like there's, right. I mean, like you look at Elon Musk. Yes, he created a software. I mean, most people don't know how to create a software and then make $60 million or whatever he made, and then do it again, and then make another 300 million, and then invest in a true rocket science company and make like 12 billion or so, right? That's not the path for the normal person. Yeah. The normal person. So of the guys that you interviewed, is there anyone out there that you can say, man, this guy or lady, right, has done a path that can kind of be duplicated, or what's the mindset of these guys? Just something that stood out that you can kind of point towards to somebody listening here saying like, well, I need to have some pointers that can get me down that road.
Yeah, so I'll give you one story, and Jace, you can share another one if something comes to your mind. I mean, the very basic of the basic is you just sock away money and put it into savings, and you'll get there eventually, right? Okay. But one that's a little more interesting and one that kind of touches on cash flow is we interviewed a military professional. He was staged in Southeast Asia, and he started buying houses in Memphis or in Tennessee, I think different locations throughout Tennessee and in the southeast, or maybe it was Alabama, Jace, I can't remember. Anyway, so he started buying houses, and all of them were anywhere from 40 to 90,000. And the whole goal was, initially the goal was, hey, he had hoarded some cash and saved some cash, and then he bought this $40,000, $50,000 home, all about 3-bed, 2 baths. He thinks they're kind of the sweet spot, and he just started buying these houses. And pretty soon he had accumulated 4 or 5, and then 6 or 7, and he kept using the same team, the same real estate team, and then he just kind of, as his income went up in the military, he kept buying them. But they were all, $40,000 to $90,000 homes, so they weren't expensive. And then flash forward here, he's in South Korea, I think, and now he owns 15 single-family homes, and he's making $10,000 to $15,000 a month, and they've all appreciated now in value. They're all somewhere between $100,000 to $200,000 in value. But it was initially just, hey, I'm going to buy a $40,000, $50,000 home. I'm going to fix it up, or I'm going to repair a couple things, and I'm going to try and rent it out. And then from there, he said, hey, it's doable, and something down the road came on sale, and he bought another one. And then it just started this cycle. As the cash kind of started flowing, he kept buying houses. And I think that's doable. Nobody said you have to buy them all in the first few years. Nobody said you have to buy them in 10 years, right? You could even buy one every couple of years. And then in 30 or 40 years, if you put them on 15-year mortgages at $50,000 to $100,000 homes, even if they're leveraged, in 30, 40 years, you could have them all paid off. Right. And so a lot of people doing that, a lot of, lower end, lower cost, less barrier to entry on single family homes of something that's definitely attainable regardless of income.
Absolutely. And we have done part of that. Like and even last weekend, we were in Dallas at an event. We host our events, and somebody was asking me, he's like, well, your daughter's going to go to college some point of time. What is your plan for that? Now, obviously we have assets for that, but I was like, well, that's already taken care of. One rental house pays for Harvard, right? Not that she's going to go to Harvard, but if she's accepted at Harvard or an equally expensive school, then one of my rental houses, I might be willing to sell one of the, many that we have for Harvard, and one for her living expenses, and we are done, right? So we, by doing that, not only can literally the average American, if they have decent credit and have put away a few dollars, they can buy one of these houses, pay it off while their kids grow up. And by the time their kids grow up, they can, if they need to, they can sell that thing. And now the kid can go to college and graduate from college with zero debt, which is one of the biggest things that brings kids down these days, because they graduate with $100,000 in student debt that takes them 30 years to pay off.
Yeah. And it starts you behind the 8 ball. It's harder to get in front. A lot of these guys kind of get started going early, but even if you're only making, $40,000, $50,000, $60,000, $70,000 a year, it's attainable.
Yeah, absolutely. And then imagine you buy 2 or 3 or 4 of those. Now you not only have cash flow, but your kid's future is basically somewhat taken care of. It's
right.
Great. And perhaps the second story you saw, I really like that one. That's totally doable for everyone out there. Now it is not hassle free, because these rental houses come with hassles, but hey, you can either have no hassles, or you can have actually an abundant lifestyle. So
but it's been amazing to me, as we've interviewed a lot of these people, and I think this gentleman specifically, but also a nurse that had 7 or 8 single family rentals, that, oftentimes we'd ask the question, hey, when's the last time you saw this house? Because they lived out of state or they lived across the country. And in several situations they say, oh, it's been 3 or 4 years, and they just found a property management company that took care of it. And of course there were hassles along the way, and maybe some people have had bigger issues, right? Yeah. But in several situations they've said, oh gosh, I haven't been to the house in 4 or 5 years.
Yeah. And ultimately it's like the cash flow is could be good, could be bad. 1 month is good, 1 month is bad. But but the appreciation that happens over the long term is just one thing. We have houses that we sold where we probably didn't make $1 in appreciation because they were kind of in a bad area, and they got and the tenants kind of did, almost every tenant, either they didn't renew after a year and left the place trash, or they did a midnight move out or something like that. So almost every year we had to put in the $5,000-$6,000 into his house to fix him up again because that's left so much damage. So after like 5 years, we're like, we're not going to do that on that house anymore. We sold it, but we sold it for $100,000 more than we bought it.
Oh, wow.
We still made money, right?
Yeah.
So we still made a ton of money, and then we 1031 exchanged that into other properties in other markets that now spit up more money. But I have houses. I have about 25 houses that I have never seen.
Wow. How many out of state?
They're all out of state.
All out of state.
Those are all out of state. The one in state I've seen, but some of them I haven't seen for like 8 years.
Wow.
Yep. So, but yeah, it goes. So you can automate it. So how about you, Jace? Do you have any a second story for me, perhaps?
Yeah, I think the second story that we should share, and maybe I'll share a short third one, but the second one is, we had a janitor on. You work for the school district. He's never made more than 50 grand, basically. Started out at 30 grand, and he was able to save over the years and use the compounded interest. In fact, he actually didn't even really have a ton of real estate. He just had his primary residence. But I think that story just goes to show, and a lot of people like that story because it is an underdog story, but he was able to do it on a very low, what we would consider below median income in the United States today.
Absolutely.
And was able to get there. And, super good dude, super humble about it. Just said, hey, look, like this was my calling. I wanted to do it, but I also wanted to have financial freedom, especially towards retirement. And this guy didn't wait. I mean, he didn't get there when he was 70. Like he got there in his 50s. I think sometimes we forget that it is possible to, if you plug away at something that, 20 to 30 year timeline is not ridiculous to think about. So if you start in your 20s, then you can attain something like that in your 50s. If you don't start till you're in your 40s, then maybe it's not realistic to get there, in a decade or less. But on the flip side, we do have some that have done it in less than a year. Whether that's been through business or some, savvy real estate investments. The next one I would kind of share was, we had a guy who was homeless, and, he came from homeless, living under a bridge, decided he didn't want that life, and went on to do various business ventures, failed at several, and eventually was able to kind of get to a point where he was, making some good money and became a millionaire. In fact, I think today he's worth about $5 million, and he's in his late 30s, early 40s now. Wow. So I think those two stories are, it's anybody can do it in this country. You just really got to have some resiliency. You've got to have some persistence, and, you kind of make your own luck if you put those two together.
Absolutely. Yeah. There's actually a book that I read a long time ago. It's called How to Make Your Own Luck. I can't find it anymore, but it was a funny and good book. And it basically talked about that you don't, it's not like stuff happens to you. Luck is the crossing of preparation and opportunity, right? Yep. Everyone gets presented with opportunities all day long. If you're not pretty ready for them, if you don't even know how to see them, then they're going to pass you by, right? Yep. And then people are going to call you lucky, but no, you were prepared. You prepared your mind and so on. So very cool. Yeah, so that goes to a point that everyone is like, I have that thing too. When we do seminars and saying, people is like, I want to have by the end of next year, I want to have $3 million or $10 million. It's like, that's cool. Most people don't make that. Yeah. For most people, but in 5 years, you can have that. That's no problem, right? Because it doesn't, or 5 or 10 years, that's not a problem. Now, it just, people are so impatient. So good things take a little time. Now you can, within 1 year, it's totally possible to get out of a job, to go be your own boss, make a really good living. But if you want that 10, 20, $30 million, it usually takes a while to get there, right? So you got to build this up a little bit, and you got to have that patience. And if you're in your 20s or 30s, man, you got 70 years in front of you. Right? Just enjoy the process. Enjoy the process. Try some things. Do some stuff. That's at least my opinion. Very cool. So now I'm interested to hearing, like, what have you guys done with the knowledge that you got from all these people? How have you guys implemented that into your life?
Yeah, I'll go first. I think the biggest thing, Clark hit on this three-legged stool that I like to talk about, and part of that three-legged stool is equity investments, and I put Roth IRA and HSA and stuff in those buckets, and part of that's I've been doing that for a long time, and I have no problem having public market exposure. The other leg is small business or equity in private businesses, and that. Ideally, I would like to have about a third, of my portfolio. And so I've made some, I've got some ownership in my company right now. And then I've got some, other plans to get some ownership in some other, private businesses, because private businesses for the most part, are what fuel the American and North American economy. And there's a lot better returns usually that you can get internally from private businesses and owning private businesses than you can in other spaces. And the other third is real estate. And, whether that's single family or multifamily, that'll probably evolve over my lifetime. But those are the kind of the three buckets that I really concentrate on. Obviously, it takes a little bit more capital to put into small businesses. I don't know that I would invest $500,000 in a new venture, but I would definitely go look at acquiring something that's already producing cash flow. And it's kind of interesting. I've got this like three-legged stool kind of like hammered in my head, especially after interviewing several of these millionaires and some of the ones on the upper echelon of the wealth chart. That there's an article that came out today. I don't know if you're familiar with Tiger 21, your listeners are, but basically it's a group of people that all have net worths over $10 million. And just recently they kind of put this pie chart together, and right now Q3 2018 through Q2 2019, their allocation is sitting 28% real estate, 24% private equity, 21% in public equities, and then the rest is very between some fixed income, hedge funds, and some cash. And I look at that and I'm like, well, what I've got in my head from interviewing all these millionaires and the way I kind of want to do my thing is not far off from that. And, these are some of the wealthiest people, in our country that have kind of gotten their heads together. And this is what they think is an ideal space. Now, obviously I don't have all the detail of what that's made up of, but I think it's interesting that they're kind of split a fourth, and a fourth. And then the other fourth is, very cash, fixed income, hedge funds. And the cash thing's an interesting topic. Clark and I sometimes will ask these guests how much they keep in cash if they do have, a lot. And it's all over the board between 5% and 20%. And I think that's one thing where you kind of just have to decide for yourself, like how much cash you want to keep on hand for opportunity versus,
Absolutely.
spending it or.
And that also changes based on the market cycles, right?
Totally.
So right now we're in the top of a market cycle, probably want to keep a little extra cash, or we like to keep a little extra cash on hand, because when the market goes through kind of I don't expect a big recession or anything like that, but if it goes through a little adjustment, there's going to be opportunities popping up, and if you have cash, you can take advantage of those. Absolutely.
Yep.
Great. How about you, Clark? I know you chose to jump into multifamily as one of the vehicles, right? But
Right.
Go ahead.
No, I was gonna touch on what Jace finished up with there. That a lot of people have found success not allocating right differently. For example, you have a lot in real estate and land, and there's other people that say, "Hey, I don't want to invest in the markets at all because I feel like I can't control it. I can't. I don't know what. I can't. It's not in my control. I don't want to invest somewhere where I can't have the control." And so, whether these buckets work for Jace and I, there's plenty of people that don't do it, right? And so to each his own. So yeah, I'm in just big picture, a couple of real estate syndications. Jace and I are actually currently looking at a smaller multifamily complex now that has an attached laundromat unit. Mm-hmm. And so working on some cash flow from a laundromat. And then similar to Jace, I have some in the market retirement accounts, HSA, no kids yet. So nothing in like a 529 or something. But I think, what these interviews have done for me is said, I'm relatively young, right? I'm 29. And so what they've done for me is saying, hey, here's what people are doing. Here it's giving me exposure to things, right? And to different investment options, different scenarios, different things, different strategies people are trying. And I think I'll just take that with me throughout life and say, hey, I heard this Jack guy, he did land flipping, right? Now I have some extra money. Let's go try that, right? Or this guy's doing this strategy or oh, this Airbnb strategy. You know, we talked to a guy who's doing he does Airbnb for mountain biking. That's all he does. So he just buys them up in the mountains and he does them for mountain biking. And so, you know, that's just as I'm getting started here and starting to invest and build up cash and kind of keep things open, you know, that's what this has done for me.
Wonderful. Awesome. I love it. I mean, this is, and now you have actually created it for other people. So your podcast is called Millionaires Unveiled, right? So so everyone go check it out. So in order to finalize the podcast, I want to ask a few questions. Actually, one extra question before we do that, and that is, if you could highlight one or two characteristics of those millionaires that you can find that they kind of had in common, what would that be?
I'll start with that. I think it's intentionality and focus. You know, I think regardless of how someone wants to allocate their net worth, regardless of what they want to invest in or what their plans for the future are, is they're intentional. You know they want to save, they know they want to invest regardless of how it is, and they're focused to do it. And sure, every now and then, right, like somebody has a failure or they slow down a little bit, but at the end of the day, these guys know what they want to do. They know what they're focused on, and girls, obviously, and they're intentional, and their intentionality carries them and carries their investments.
Yeah. Okay. How about you, Jace?
I would just add resiliency and persistence. You know, it's going to take time for most people. A lot of our millionaires, like you hear the stories that they've had a failure or two, whether it's a bad investment, failed business, you know, lost some money on a real estate deal or whatever. They're still resilient. They're persistent. They keep with it over and over, year after year after year, decade after decade, to kind of get to that point.
Awesome. All right. Very cool. So you guys okay with a couple of quick hitting questions, a lightning round?
Yeah.
Perfect. Right, okay. Simple, easy question.
We can't say no to that, man, because that's what we did to you when you came on ours.
That's right. So that's true. I remember that. So these are very simple. What's the best book you've ever read that helped you through in your career?
We were both just going to answer at the same time. You know, I just finished Miracle Morning by Hal Elrod. And, you know, I was always the person that said I'm not a morning person, and I still feel that way. And he kind of acknowledges in the book that you know, that's the case. But I've just kind of realized, hey, if I want to be successful, whether it's, you know, whatever, in any aspect of my life, marriage, family, investing, I've got to be intentional with my self-development. And
right.
that book really helped me realize and understand that setting a time for yourself is critical.
Right. Wonderful. Yeah, I read this book. I tried it. I failed at it because I'm the returning non-morning person. So I agree with the points of the intentionality and the things that you need to do. I just like to sleep until 8. This is just not happening in my life. So, but the other pieces I support there. Yes.
Right. Yeah.
How about you, Jace?
You know, that's a tough question. I think the book that's making the most impression on me right now is a book I'm in the middle of reading. It's called Atomic Habits by James Clear. It was actually just recommended to us on our podcast. And it just gets into the detail of like how we form habits and the critical, you know, mindset that develops around the way we do the things that we do. And for me, I think just understanding some of the psychology behind what drives some of our habits and how to change them has been super critical. And I'm not even finished with the book.
Awesome. All right. Wonderful. Next question is, what's the one thing you wish you would have done differently when you first started out investing or started on that path?
I wish I would have started reading earlier and listening to podcasts and just hearing, you know, either stories or strategies or whatever. You know, I think the earlier you get exposed to it, the earlier you start developing yourself, the earlier you continue to learn, you know, you just get motivated, right? You hear stories of successful people, you read people doing successful things. And it starts making you want to do the same. So, you know, I feel like I started that earlier after college, but I feel like I wish I would have exposed that even earlier in my life.
Okay. How about you, Jace?
I'm the same. You know, I started investing and earning when I was a teenager. I still had opportunities to do stuff earlier. In fact, there's a funny story that goes around my family about how I spent $2,000 at Taco Bell when I was 16 years old and had no business spending $2,000 at Taco Bell because I was living at home and everything else. And, you know, I look back to some of the money I was making.
How in the world do you spend $2,000 at Taco Bell?
in a year. I don't know.
A year.
Buying
Okay.
burritos. Yeah.
I thought like you invited the entire city because it's hard.
No. You're gonna come, right? No. I look back at a great time, but if I would have been able to take some of that money and either invest in myself at that point or invest even in public markets with some of that money, I just look how much it'd be worth today at 31 years old, and that's probably my biggest, just starting early. I think anybody always wants to start earlier, get exposure earlier, but it's true, it helps.
Yeah, I remember reading in a book about Warren Buffett. Warren Buffett, one time, his wife wanted to remodel the house that he still lives in, and she spent making an addition, spent I think $35,000 back in the '60s or so, '70s on that remodel, and he just almost fainted. He's like, do you know how much that will be once in 30 years from now, right? How much that will compound to? They still spend it, and I think it was probably well spent. But yeah, it goes to that same point. Great. So, have you guys had any failures already in your career? And if yes, what would be the biggest failure that you guys have found so far or come across so far?
Yeah, I'd say I just invested last year in a syndication, and it's here in New York with the company I work for. And the rent, we do a lot in the rent stabilization space, and the rent laws just turned south on us. So I probably lost 40% of that.
Mm-hmm. I just heard they just did a lot of changes there. Yeah.
Yeah. And what would I do differently? I don't know. I thought at the time it was a good investment. I think the lesson learned probably is, hey, you do as much due diligence and kind of foresight as you can. And after that, you make a decision and you live with it. Right. I mean, there's nothing at the time where I would have known. I guess also a lesson is you don't put all your eggs in one basket or on one deal in case something like that were to happen. But it happened.
It doesn't exist, right?
Yeah, I mean, it is what it is. So what am I going to do,
Yeah. How about you, Jace?
Yeah, I think probably the biggest mistakes I've made are just not vetting a few people that I've hired really well. And those have, multiplied into several $1,000 mistakes. I haven't had a deal per se yet lose a ton of money like Clark just alluded to, but definitely hiring some people that I didn't do enough due diligence on that ended up costing a lot of money.
All right. Well, we have done I've done both, right? So yeah, it makes sense. Absolutely. Now we just bought a year ago an apartment complex, and it had more challenges than we anticipated. So the property went down in occupancy to 60-something%. The property was losing money. I had to put money out of my own pocket to make sure our investors are paid and so on. But the good news is it took a year. Now it's 97% occupied. It's now producing cash. We'll ultimately get that money back. But at a time, there's some tough times in between. And you got to make sure you work with the right people, also with the right things, and vet everyone. And so it all goes into one thing. Good stuff here, guys. All right. So then, talking about the habits, so you read the Miracle Morning. So but prior to that, or even right now, what kind of habits do you already have? Do you have any morning habits or daily habits that contribute to your success?
I'm trying to read every single night before I go to bed. If I get the time in the morning, then great. If I don't, then I'm trying to read some at night. And, I feel like if I read 10, 15 minutes every day, I'm always reading throughout the day, and everyone gets sent articles, and at work you're looking things up, and I get all that, but kind of 10, 15 minutes at night where I'm just trying to dedicate to just learning the book I'm in, trying to be full into it and engaged is one thing I'm really focused on right now.
Awesome. All right, Jace.
Yeah, just reviewing my goals on a daily basis, weekly basis, and creating kind of my financial statements on a monthly basis so that I can kind of cater everything back to my goals. And if I need to adjust something, I can adjust something instead of waiting, and doing it once a year. Spoken
like a true CFO. Yeah. All right, good. But you know what? This is good. I mean, this is important and stuff. So few people do that. Like if you don't stay in touch with your goals, you forget about them. You get off track. So love it. So now, based on all the interviews you've done, that you guys done, last question: what's the single best piece of advice you can give our listeners who are just starting on their journey. And I mean, you guys have now interviewed, you have all the data right now, you're well on your way yourself. And I absolutely love the path that you guys have taken. So, what's one piece of advice you could give somebody else?
Yeah, I'd say kind of go back to what we said earlier is start early and be intentional. I think too often people think, hey, either A, I don't know how to get started, or B, I don't have enough to get started. And, there's so much resources out there. There's so much information out there. There's podcasts, there's websites, there's books, right? All successful people have put something together in a sense. And so there's so much information out there to decide how you want to get started. And there's people that get started for nothing, right? If you want, you can buy land for cheap. You can buy a house for cheap. You can put a little bit in the market. And so you just you got to be intentional. You got to set your goals and say, hey, this is the year, or this is the week, or this is the month I'm going to do it. And you got to get started.
Right. Wonderful.
Say elevate your circle of influence. So if there's somebody that you want to be like, figure out how to get those types of people in your circle. One thing that was suggested to me a long time ago that has played out extremely well was to donate to some of these people's charity. If you're trying to figure out how to get in, whether it's a meeting with them or lunch with them or get in that type of circle, donate to their charity, donate to something that's important to them. Most likely these people financially, you're not going to change their life by buying them lunch or dinner or something, but offering to do that kind of thing, it's worked out great for me. I know a lot of other people that it's worked out, really well. And there's some people that I've found myself with at lunch or on bike rides with that, it's still kind of, you got to pinch me, and I'm shocked that it worked out the way it did, but I followed some people's advice that way, and it's worked out.
Good. So you guys are 29, about both of you, approximately?
31 for me.
31, 29. So you guys are young kids. And now I feel like I'm 29 or 31, but I'm 49, right? So I can tell you, as I'm getting up into the close to the 50s and saying, there's one thing that most wealthy people that I've met, that they're, except for perhaps a few, but the majority, when they get older, they love seeing young guys or ladies, seeing young guys actually do that. Because I know what it took to get there, right? And when we see somebody that is doing what it takes to get there, we automatically want to reach a hand and help it. The issue is that there's a million people that want your time, but only a few of them are really doing what it takes. So if you set yourself apart from that by taking that initiative, they're more than happy to actually meet with you and extend a piece of advice, extend an arm and give a helping hand, because it's just there's not enough people like that out there in the world that actually take this up and then grab the bull by the horns and learn what it takes. So I really commend you for that. I'm super excited for what you guys do. And I love that you've chosen the path of the podcast, because instead of just meeting people for lunch and keeping that knowledge, now the world has that knowledge too. So to my listeners, make sure you go check out. We put in the show notes and everything, and in the comments underneath if you watch this on YouTube. Make sure you go check out Millionaires Unveiled. I love the stories, and I love the stories you shared. And if you have interviewed over 101, there's got to be someone that you connect with as an audience here that you said, oh my God, I can do that, and then you go down that path. So thank you very much for being on the call. Anything else? People can find you right on millionairesunveiled.com also.
Yeah, Apple, Stitcher, anything. And if you want to listen to Jack's episode, that's episode number 87, where we interviewed him on our podcast, if you want to hear more about your story.
Wonderful. And you guys asked me some really direct and detailed questions, which is good. I mean, you want to make sure that the people come on your show actually do what they say they do and have the net worth that they say they have, right? So I'm fully with you. All right. So with that, thank you very much, everyone. Thank you guys for the thing. That concludes our show. As always, love if you give us a 5-star review. If you're watching this on YouTube, make sure you go below, like it, subscribe to our channel. If you're watching on any other kind of platform, give us a 5-star review. This concludes our show. Thank you very much. Bye-bye, everyone.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.